All right, folks, back to work. Well, it wasn't always pretty today. Pretty darn good day today. Got that two-legged pullback on the S&P and that beautiful range rotation we talked about on the NASDAQ in last night's video. Hope you guys made some money on that stuff as well here today. Now, setting up for tomorrow, we have a very interesting situation for tomorrow. We got Jay Powell speaking tomorrow afternoon. More importantly, though, we've got these beautiful ranges and this gorgeous range rotation on both the S&P and the NASDAQ. Now, that's important because ranges act like magnets and they love to rotate. So I've got two types of trades on my radar for tomorrow. Definitely have some breakout pullbacks I'm watching for Wednesday morning. But if we're lucky, though, I've got two types of bull trap patterns I'm watching before Jay Powell speaks tomorrow afternoon. So I'm going to cover the entire roadmap as always in these videos, the entries, the exits. I'll make sure everyone has a game plan, a roadmap to make some money tomorrow as well. So enough of the intro. Charts look fantastic right now. Let's go make some more money this week on Wednesday morning before Jay Powell speaks tomorrow afternoon. The E-mini and the SPY is all ready to go tonight. NASDAQ triple Qs are ready to go. I have three very important clues on these charts that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly time frames, these 60-minute time frames. Look at the S&P and SPY right now. Look at that beautiful wedge as it gets narrower and narrower. Now, usually when we get narrow like this, we're waiting for, expecting a sharp correction off of that high to free up some open space for these buyers. That's one big clue on the S&P here. On the NASDAQ too, we're almost back to the all-time high. We had that big run up after the election, that big crash, and now we're all the way back to that all-time high. I would imagine anybody who bought the dip back there, they're probably got their profit target sitting right up at the all-time high. So from what I can tell right now, S&P at wedge resistance, NASDAQ major high resistance. That's definitely one really big important clue. But I'll tell you though, it's not the most important clue. I have two more important clues on some faster time frames. Help us time the entries because these are great for the big picture, but they're not going to make it easy to time entries on an hourly chart. We'll talk about entry timing here in just a moment. Don't you worry. Before we do that, though, let's check schedule for tomorrow. There's two things on my mind for tomorrow morning. First things first is the ISM Services Index at 10 o'clock Eastern Time. We saw the manufacturing component on Monday morning. We're going to see more of this tomorrow at 10 a.m. That is definitely the big economic news for tomorrow. Keep that on your radar. And of course, Jay Powell tomorrow afternoon. Everyone's wondering, has this stubborn inflation, has this caused the Fed to back off on rate cuts coming in December? We have an FOMC meeting and we're expecting a quarter point rate cut on December the 18th. We're going to hear from Powell and see if he still thinks that's a good idea. I would imagine that is the big headline for tomorrow. So we'll make the most of it tomorrow morning in the morning trade room and grab the popcorn and watch Jay Powell's announcement tomorrow afternoon. So 10 o'clock Eastern Time, keep your eyes on that 10 o'clock shock we call in the trade room. And again, Powell tomorrow afternoon. Now, let's get back to our charts. The money is made on the charts. Let's start first right now on the S&P and SPY. We'll roll over to the NASDAQ here as soon as possible. I mentioned earlier, we're probably into some major resistance right now on this hourly chart. As this thing gets narrower, very difficult to find open space up there. That usually produces a relatively sharp correction for buyers to buy nice and low. That's one important clue, but the bigger clues are on some tick charts. Tick charts are best for entry timing because they make the patterns easier to see. All the time frames, by the way, folks, in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. It's pretty much the only indicator I use to find lots of winning trades each week. Now, there's two really big clues here on the tick charts. The most important clue was this bearish move down into a trading range. Now, why is that important? Well, because ranges act like magnets and they love to rotate. We measure the amount below the range. We project now back above the range. That's a big time area of resistance. And with that slightly bearish tone to it, you know that range would love to drag this market right back down into that trading range. Combine that with a retest of yesterday's high, lot of resistance. Now, we're overall bullish right now. I would love to get a breakout pullback off of that trading range, but until we see a little more evidence, we need to get a lot more conviction going higher here to justify buying a breakout pullback. So knowing that, we're overall bullish, but running into major resistance on the 60, major resistance here on the tick charts right now. I have 3 pretty easy trades I'm watching for tomorrow. I have some bonus trades, by the way, too, on the NASDAQ. We'll talk about those a bit later on in the video. So this will be a masterclass, bull traps, breakout pullbacks. You're going to love this one from start to finish. Now, there's 2 types of bull traps I'd love to sell off of this high. But remember, picking tops in a bull market like this isn't as easy as we want it to. So anytime I try to sell, and again, try to get that rotation back to the other side of that trading range, we buy it back up from there. Whenever I'm trying to sell in an overall bull market, I always go half size position, quarter size position. So please size accordingly. 2 bull traps I always look for. One is a classic technical bull trap. It's a lower low in price and a move right above that high. Strong red candle closing below that 21 EMA. We call these crown reversal patterns in our trade room. This is not a great place to be a buyer. If I can see buyers coming in and trying once, trying twice, yeah, now I know all their stops are sitting right below that low, and I can look for that short, right? Basically selling into all the buyers' stop losses. If you're caught long, only way out of that long trade is to sell your way out. This crown reversal is an easy way to do that. And again, the goal would be to rotate back to the other side of that trading range. That's one of 3 trades I'm watching for tomorrow. A second type of bull trap is a bit easier on the emotions. It's a V-top that begins to grind going lower. Now, when this happens, momentum begins to turn now for the sellers. That voice in your head is going to tell you to chase after it. Do not chase this thing going lower because, again, we're an overall bull market. What I do is mark a trend line off the low, find a channel off that high, and then look left. Find one of these prior swings, and there is your bull trap off the high. It's a series of lower lows and a move right above that high. It's a bull trap like I teach in our free video class. Now, in all reality, this could be a bull trap pattern. A lot of times it'll go above the moving average. It could be a buyer failure pattern off the moving average. If you're in my free video classes right now, you know what I'm talking about. But the bottom line is I want to get any of my favorite entry patterns off the top of that channel. It's a V-top reversal, a bit easier on the emotions for that bull trap. Now, what if I'm wrong, right? What if I'm wrong? What if we can't get this thing to short going lower here? What if this thing keeps on going higher, right? What if we start running and going higher? Remember, I said earlier, it's not easy to pick tops in an overall bull market. So what if I'm wrong on this? What if it keeps going higher? Well, this becomes an easy one now. If we keep going higher and we start seeing a very convincing break through that pendulum swing, it's usually a pretty good giveaway, right? If we can break through the rotation up here and get a nice big breakout, now we can look for a breakout pullback. Now, breakout pullbacks, remember, whenever I think breakout pullback, I always think about a 2-legged pullback. 1 leg, 2 leg. Think about a measured move. Now, at this point now, that gives me now the general area to buy the breakout pullback. But remember, I don't have a crystal ball. It may keep on rolling lower, right? So what I'll do on this situation is don't blindly buy that 2-legged pullback. Wait for this market now to pull back to that 21 EMA. Let the bears try once. Let them try twice. Use that 2-try failure pattern I teach in our free video classes and trap those bears in for a run going higher. Now remember, as the market tries to go back up and retest the high, we can add to our winners. And to do that, we're going to use a technical bear trap pattern. It's a separation of the moving average. It's a higher high in price. I want to get right below that low. Nice strong green candle closing firmly above that 21 EMA. That is a gorgeous add-on entry as we're making our way back up to retest the high. So a third trade here for tomorrow. If I'm wrong about the bull trap, I mean, jump going higher, I'm not going to chase after it. I'm going to try to use this range for a breakout pullback, two-legged pullback. The technique for entry we'll use here is a failure pattern into a trap combination. Now, let's slow down for a second because I got a couple more bonus trades I want to talk about. I know most of you folks watching right now, you know these patterns. You're making money on failures, traps. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry. I teach this entire strategy. I have a ton of examples of bull traps, bear traps, failure patterns, range rotations. Guys, I teach so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry patterns so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries right now, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course. Everyone loves all the trade examples I include in that short video series. The best part is it's 100% free. Also keep in mind too, folks, I'm going to put all the important links you'll need to learn more. I'll put all the important links in the description of the YouTube video. Definitely start first on the free video course. Everyone loves the free video series. Don't forget too, the place to be every morning is in our trade room, 8 o'clock Eastern time. Come trade with me. I'll put all the trade room information you'll need in the description of the YouTube video. And as always, I post a lot of charts, videos, mindset stuff on Twitter, X during the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more about the stuff and hopefully earn a lot more with it is all linked in the description of this YouTube video. So where did we leave off here? We talked about earlier a couple bull traps right off the high, that crown reversal pattern, that V-top. We talked about that breakout and that pullback, right? That two-legged pullback, the failure trap combination. Now, a very good question would be, what if we get that bull trap and we wind up all the way back down at that low right now? This is a great place to be a buyer, isn't it? Because now we're back at the low of that range. It's an overall bull market, right? This is a great place to be a buyer. Here's the problem though. If it rotates off this high, it's going to be so strong, okay? That momentum will be very strong. That momentum is going to want to pull back and retest that low before it rotates back going higher, okay? Very, very important. So if we do get that, again, that bull trap off the high and get that short going lower, this is where I need to be very careful about where my entries are going to be. This is not a great place to be a seller. If you want to sell, sell high. Don't sell low. So I'm not going to sell down here. I would love to trap in, though, some of these rookie bears down here. To do that, I'm going to use that same two-try failure pattern, like we saw right back here, right? Run lower, bears once, bears twice, buy into those stops, going higher here. As we go lower, right? Trap the bears in. Don't pick the bottom on this stuff, right? I don't know. It may keep going. I don't know. What I do know, though, is once those bears try twice, now I've got them trapped and I can buy into those stops for a run back going higher. Ideally, I want to get that failure into that trap pattern combination. It's always failures first and then adding on with trap patterns second, right? It'll pull back to that 21 EMA. The bears will come in, give it a couple tries. Why is it important? Because once those bears try twice, now I know where their stops are. I can use their stops to fuel that move going higher. The add-on is always going to be a bear trap here because I want to buy as low as I can. And as we talk about in the free video course, the bear trap pattern is always the best one to buy as low as I can because you're buying below that prior swing. Now, be aware of this, okay? Be aware of this. If we make that run lower and we bounce back up here and I start getting 1, 2 like this, I do not want to buy way up here. All right. Again, if we rotate off the high like this, that short-term momentum is going to want to go back and retest that low. All right. So if we bounce hard off of that low, I don't want to buy up. I don't want to buy up here. All right. I want to buy basically down there. I'm going to flip it now to a bear trap entry, right? Bear traps are very simple, right? It's one try, two try. But again, a failure pattern is run lower, 1, 2, failure pattern, right? It's basically a failed breakout. All right. And of course, in the video class, the free video course, I'll talk about the difference between a failure pattern and a trap pattern. Trap patterns are very specific. They go below that prior swing. I'm buying low in a trap pattern. I'm buying as it goes higher with a failure pattern. I can use a failure pattern if it's low enough. Right? 1, 2. I can use that failure if it's low enough. If it bounces hard off that low, I do not want to buy up here. I want to buy as low as I can because I want to be in the money on that trade before we get the potential to roll back down again, right? Makes sense? And hopefully we won't need it. Hopefully we'll keep on rolling higher here. But as it goes higher though, I gotta be careful, right? Because bears are gonna come in, try to whack that thing lower. And remember, if they do take it back to retest that low, a double bottom retest is one of my favorite ways to make money in an overall bull market, because now the bears who sold right here, they're taking their profit at that low. Right? Sellers up here become buyers down here. This is a horrible place to be selling, right? I don't care how strong that move down was. We're an overall bull market. That means this area right here is a gift for the buyers. Do it again. Trap those bears in. Get that 1, get that 2, squeeze those stops. Now, the market in these situations, it wants to go back and take out that high first. So as we look for that add-on trade, which is always going to be a bear trap entry, right? Always going to be buying as low as I can. I want that bear trap before we go back up and take out that high, right? Makes sense, okay? Profit comes off at the high, leave that runner because you know how ranges work, right? Ranges love to rotate back and forth. A small variation of that would be if we ran lower and we don't get a 1, 2 back up, right? We don't get that. It just kind of boing and runs right back up again. That V bottom off the low is not our favorite entry, obviously, because we want to be buying as low as we possibly can. But if I don't get a bear trap down here, a 2-try failure pattern, right? If it runs higher, what I'll do is I'm going to mark off a trend line, right? Off that high, bring it down off that low. As always, look left, find some prior swings. My favorite entries are always going to be below a prior swing on the first test of that channel. Does that make sense, right? First test is the best test. If I can get that move right below a prior swing, line up around below that channel, those are almost guaranteed winners. All right, guys? So watch for that bounce and that grind going higher. That will give you that channel you need to time the perfect entry off of that low. All right, guys? Some variations on that. Now, how about we talk about the NASDAQ now? We've covered a lot of good details here so far on the S&P. Let's talk NASDAQ. NASDAQ is a very interesting chart right now. Before we dive in though and talk NASDAQ, if you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies, because YouTube rewards me every time you like and subscribe. I know we're all very busy people these days. Holiday season is here right now. I appreciate you all spending a few valuable minutes with me every evening on these videos. So thank you so much for the likes, subscribes, and all the support. Now let's dive in and talk about the NASDAQ. I mentioned earlier, the NASDAQ, look at this chart right now. This chart is goofy. This chart is goofy right now. Look at this chart right now, right? We get that huge move up, right? Post-election, right? The Trump win a few weeks ago. Of course, a big move up has to give us a big move down to attract in more buyers. And then all the way back up now to retest the high. I mentioned earlier, right, that anybody who bought down here, they probably have their profit targets up around those highs right now. So buyers down here become sellers up here. Now, we definitely may blow through this high. There may be a bit of a blow off top here at this high, but I'll tell you, a very difficult spot to justify being a buyer right now unless we can get some meaningful pullback. That is what the overall hourly chart is telling us. Now drill down to our tick charts and really there's kind of three clues here on the chart. The first one is that all-time high up there. We know where we are right now. We can easily see. There's a good chance overnight tonight we will finish off that move and take out the all-time high. There's so much FOMO in the market right now before we retest all the all-time high. But the two bigger clues, though, is you'll notice we have a range breakout. Now, range breakouts, right? There's your pendulum swing. That's a pretty convincing break. It's a pretty convincing break, right, of that pendulum swing. Usually that means this range market now is a trending market. Whenever markets break out of a trading range, they almost always pull back and bounce off that range. Again, these are called breakout pullbacks. They're one of the most consistent things I know about technical analysis. Now, with that said, this is also a pretty big move today. We've now had back-to-back big moves. Look at that move from yesterday, right? So back-to-back big moves right now. Now again, we're definitely bullish overall, and I don't love calling tops in a big bull market like this, but we are very, very much, you could say, I hate the word overbought, but we're definitely very overextended at this point. So at this point now, you would think now the buyers are going to want to pull back right into that breakout pullback zone. The big move higher says two-legged pullback, right, to buy low. The range breakout says breakout pullback, right, to buy nice and low right now. What I'm thinking right now is if I'm lucky, I can get a bull trap pattern to sell during that pullback and then scoop it up here on the breakout pullback and go back up to retest the high. So let's put that together here. Like I mentioned earlier on the S&P, one of those bull trap patterns was that crown reversal pattern, the basic technical bull trap. It's buyers trying once, it's buyers trying twice. Now again, these are not as easy as we'd like them to be. So I can be very selective on these bull traps. It needs to be that lower low in price, right above that high, strong red candle, closing convincingly below that 21 EMA, and you're in on a crown reversal. It's basically a technical bull trap. Buyers once, buyers twice, a horrible spot to be a buyer. Let's sell right into those stops, right? Let those buyers sell their way out of their position. Arguably, the easier bull trap is that V-top, right? That V-top. We go up, we V-top off the high. And again, don't be surprised if we go up a bit higher here and then V-top like that. I can easily see this blowing off a top here above that 40 3/4. But again, the minute it V-tops like that, you start seeing this thing grind down. Again, these are a bit easier on the emotions because now we have momentum now is moving in the right direction for us. Find that low, mark that channel high. And again, I will always be looking for that first test, right? That first test up above that high and back down from there. Remember, it's the first touch of that channel. First test is the best test. It's like an electrified level right there in the first test of it. And again, this could be a bull trap. Like I was showing you here. It could be a buyer failure pattern, a pullback combo. I can't go over all the entry patterns I teach in the free video course, but that's why I have that free video class for you. So make sure you grab that link in the description. If you like making money, if you're tired of losing money, definitely take that free video course. Everyone loves all the trade examples. Get you guys on the right track there. So two types of bull traps. And again, if this was to run a bit higher here and show me some more proof on this, then we start thinking about that two-legged pullback. Maybe not that big, right? That two-legged pullback. Think about now all of these prior highs here now, right? This whole area basically becomes a breakout pullback zone. Now, remember on this, right? We may, at this point, right, it may go up, it may run and begin to grind. Right? If it grinds down, that's not what I want, right? The grinder says, mark that low, mark that high, right? Find that bull trap. But by the way, this also goes for the S&P as well, right? So if we break out and start pulling back and it begins to grind down, the grinder is always a giveaway. We're probably getting one more leg going lower. However though, right? If it does make that sharp two-legged pullback, as we always say in my trade room, the best two-legged pullbacks are always the scary ones. They're always the scary ones. They almost look a little scary, right? As it comes back like that. It makes that strong run down. The best ones are the scary ones, right? The ones that kind of roll slowly lower, those grinding ones, those seem better, but they're not better. They're more difficult to get that pop back up again. Anyways, I'd love to get that two-legged pullback. As we start pulling back into key areas, what was resistance becomes an area of support. Again, it could be anywhere in this area, really. I don't have a crystal ball for tomorrow. What I do know, though, is once I get that two-legged pullback, this will seem very bearish. Hopefully, we can get some rookies coming in, chasing after it. Bears once, bears twice. Trap again, this will be inside, right off some level of support here. Trap those bears in with a failure pattern. And remember, in these situations, the buyers want one thing. They want to run back up to retest the high. On the way back up to retest the high, this is where we add to our winners. Or some folks may not have the confidence to take that two-try failure. If not, that bear trap is the way back in or getting in after that bounce confirms for you. So failure in a trap combination. Target as always in these is always back up to retest that high, right? Makes sense on that? So a few bull traps off the high. If I'm wrong about the bull trap, keep going higher. We'll look for some breakout pullbacks. If we're lucky, right, we go up. Trap those bulls in, crown reversal, run it lower, trap the bears in, and whoop, right back up again. A bit of a double dip there off the highs and the lows. And again, all this can also apply to the S&P as well. Now, one final thing I want to talk about here is if we go sideways in a range up here, that could easily happen, right? We might get stuck up here around these all-time highs in a range. Remember, whenever we have multiple ranges, the new range acts as a magnet. The old range acts as a breakout pullback. Okay, so knowing that, same basic idea. Wait for a breakout, trap those bears in, squeeze those stops, right, and run back up into that range again. Now remember, ranges love to rotate. So if we see a range up here, now we're not just taking our profit off all at that high. We now measure below that range. We project now above, right? Back over here, right? Measure below, back above, okay, right? Makes sense? So that now is where the market wants to go from there. This is why we always say in our trade room, ranges are our favorites because they tell us how to trade that rotation. So be aware if we do go sideways into that range, and again, it might be a bit higher up here, obviously, right? But if you go sideways now, that will anchor this market higher now. We're going to start using that prior range for breakout pullbacks. Most important thing is watch the rotation, the amount below, the amount above. Those can be very lucrative trades. A well-placed runner on a range rotation can make your entire week. All right, folks, that's the game plan for tomorrow. I've covered a lot here in this video. Hope it all made sense. Now, don't forget, tomorrow morning, the place to be is with us in our trade room. Guys, the easiest way to make money is to learn and trade along every morning, 8 o'clock Eastern time. I'll put all the important links you'll need to learn more, get started. Definitely begin first on the free video classes, then come out and join our trade room, and we'll do it all together every morning at the opening bell. In the meantime, folks, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.